Good morning, sir.
Everybody, are you able to hear me?
Yes, sir.
sir. Yes, sir.
So very good afternoon.
Good afternoon, sir.
So I hope, can we start the session now, or should we wait for another couple of minutes? Can you please switch on your cameras, please? Yeah, can you switch on your camera? So I think Chirag Infotech, Nitin, Ramesh, Raichur, team, please switch on your camera. Sisti Infotech. So kindly all of you switch on your camera. Kavita Computers. So all of you kindly switch on your camera, please. So I will request all of you to switch on your camera, please. I'm still saying, I will just request, because at least we are not able to do face-to-face training. At least you switch on your camera so that I can see all of you. Because communication is one of the most important thing. I just wanted to, once you speak, I also want to hear your expressions when you're speaking also. So if you can kindly switch on your camera, please. Okay. So students, tomorrow is basically the session as we are looking forward for our presentation on smart city. So I've been getting few calls from some of the faculties and also from some of you. So I just wanted to let you know, let's have any doubt you're having, kindly let me know so that I can clear all of your doubts. And next is that I'm not got all the centers, the teams, and also the name of the project you are going to do. So I will also share my screen and show you that is not acceptable. You have to provide the names, and I have requested you a long time back because I also need to check that what are the teams and who are going to present what kind of smart city, right? So let me share my screen, and this is currently, I just wanted to, if you have not done it, I will do it along with you. So let me know once you're able to see my screen.
Yeah, we can see it.
Okay, so currently this is what I have got. Right? As you can see, there are a lot of places blanks are there. You have not updated. And some of you have put EVA or basically drones, right? So I think drone is not the subject for tomorrow. So I have already put in yellow color, right? So let's go one by one, because if you do not have the time, let's do it now. So from the SH system, Raichur, so what is the project? And I hope this is the team members for tomorrow. This is the, or you need some changes, please let me know right away. Hello, students.
Yes,
And the
sir.
faculties. Is this
Yes, sir.
the names are all correct, or the teams, the participant name for each of the team is got changed again?
No, sir. It is correct, sir. It is correct.
What is it? Eva is the correct one, or some other name?
Eva City, sir.
So let me change the color now. Then. Okay, next is basically Sri Satyam Technopark
Thank you,
Bidar. So I've not seen any names. What you're planning to do? Hello. So what is your plan for tomorrow? Is anybody from Sri Satyam Technopark is there? Hello. Is anybody from Satyam Technopark Bidar is there? Sweta, can you please take a note of this?
Sir, I have sent an updated form, sir. If you can please check it.
I'll check the updated 1 minute. I can check the updated one also, not a problem.
Okay, sir.
I can right away I can open and show you. I've
Okay.
not seen any changes.
Yeah, okay, sir.
Just give me 1 minute. Let me open it. So I'm sharing my screen, Sweta. So this is the one I have received, right? This is the recent one. Sweta, is this the recent one, right? Hello?
Sir.
290 you have sent me, right?
Sir, I have sent you through the WhatsApp, sir.
Oh God. So, okay. Can you send me through email? Or you can tell me right away, I can update it. Let me check through WhatsApp.
Sorry, sir, there was an internet issue. Sir, I've sent you through the WhatsApp.
No problem. So let me just check through the WhatsApp. Okay. I can find still.
Sir, am I
missing name
audible,
is-
sir?
Yeah, you're audible. Still in the WhatsApp, I'm checking through the WhatsApp now, what you have sent, right? I will update based on that. What I'm seeing is that still few are missing. One is basically the missing is the CK Tech. Ashwin, are you there?
Hi.
So CK Tech, your name is here. It is missing. What Sweta has sent to me, the last one.
Sir,
Sir,
we will send, sir.
Name of the project I have not given, sir.
Yeah, kindly give the name of the project, right? So I know what is the project you are doing. So, Seda, can you please get it in next 1 hour, this one, and update
Yes,
and
sir.
send?
Yeah, sir, actually, yeah, only with CK Tech, it is pending. Others, I've got it, sir.
I'm seeing that.
I've sent
Whatever
you-
you WhatsApp you send, it is there.
Yes, sir. I'm mailing you as well, sir, in a minute.
Yep. Okay. Now coming to basically what we are going to do. This is I've told you regarding the smart city. Now,
Hello.
yes. Yeah,
I'm
tell me.
Nitin. Hello, sir. This is Afrin from SSC Haveri.
Yes, tell me, please.
Sir, there was a little change in the names, the group names.
So please update and give it to Sweta, and let it see she's forwarding. Please ask her to send the updated one.
Sure, sir. Sure. Thank you.
Please do it in next 1 hour, please.
Sure,
Yes,
sure, sir.
I'll update it and send it. Thank you.
Right. So next is regarding the smart city. Now, in case of smart city, we have told that you have to also providing some inputs on the finance, right? And how your smart city will be from the income point of view, you have to provide it. Because you have seen in several cases, if the finance is not taken care, slowly those cities will be bankrupt, or it can be a ghost city. And the project can be unviable, right? Now, I just wanted to check with all of you. So do you have got any questions now? Do you have got any questions? Because you will be going to presenting to me tomorrow, all of you. So any questions from your side? So if you have got any questions, you need any clarifications, please let me know. So let me start with each of the center. So as Sharp Computers, you have understood everything? Any question from your side for tomorrow's presentation for the assignment? I'm not able to hear anything from Sharp Computers. Any clarification you need? I'm not able to hear anything.
Sir, this is Anupam Patil, L2 faculty,
Yes.
sir.
Yes, please tell
Yes,
me.
sir. There no doubts regarding smart city, sir.
Okay.
We understood, sir.
Okay. Now, next I go to SSCV Haveri. Any questions, any clarification you need?
No, sir. No doubt, sir.
Okay. So, in fact, I want basically from all of you
Sir, KTC
very
Hubli,
good
no doubt, sir.
presentation and more improved presentation.
Yes, sir.
Okay. Next is SHH Systems Raichur. Any clarifications? Any questions you're having?
No, sir.
Okay. Next, I go to Sri Satyam Technopark, Bidar.
Yes,
Any
sir. So
questions?
no doubts on no, sir, no doubts on smart city. Also,
Next
sir,
is-
we have finalized the project assignment topic. So our topic would be smart city proposal for Bangalore. Sir, we have introduced this assignment to convert the existing infrastructure and all that we have in Bangalore into smart city.
Okay, great. In fact, I can tell you something, right? You have seen about the city Niyam, right? I've shown some presentations and this thing. Now,
Yes,
do you
sir.
know that Niyam city is basically created on 175-kilometer long? And if you know, it is basically done on a way where it is absolutely on a straight line, right? Now,
Yes, sir.
do you know what is the problem it's going to face? It is basically when the one part of the city, right, is going to have the sunrise, but other side, if the tall buildings around 8-story building is there, other side will not have the sunlight.
Mhm.
Next is that if it is generally cities are grown basically surrounding some water, and it is in a circular way generally city is developed, right? Generally, you don't see a city that is absolutely stretched in a long stretch line of 175 kilometers. Now, if somebody has to go from one end to the other end, he has to go in a long distance. Next is that I'm just telling you some of the cons also you need to think through. Next is that if you see, they have said that it is basically they're going to use vehicles which is only available there, and which is basically what vehicles? Those are renewable on energy. So that means the people who are coming to this city are not going to have their own cars. means what? They have to pay for that usage of that card. So the people who are going to be coming to the city has to bear the cost of that. Next is that, as you know, Saudi Arabia doesn't have a lot of water. They do a lot of desanitization of the sea or ocean and get the drinking water. So that is also has got a lot of cost. And they're spending almost $500 billion, okay, for this city. And after that, there will be other things they need to provide and invest so that people come and start living there. So will they be able to generate so much of fund to repay the amount of investment they're doing? Think through. So there are some issues, or for example, in Saudi Arabia, there is another, you can see a Google also, half of the cities in the sea, right? If anybody knows, Saudi Arabia is basically a country, it's full of deserts. So wherever you can go, you can use the desert land and you can do it. You don't require to invest your basically reclaim part of the city into the sea. It's not the Neom city, it's another city they're creating. That I think Octavia city, or I forgot the name. So you can do a Google search and you can find it out, right? So this the thing that if you, for example, like Mumbai, you need to reclaim some of the part of the sea because there is no land available. Or if you go to Singapore, they have reclaimed, and now they have already stopped, reclaim a part of the ocean, right, to have those buildings. Now, why in a country like Saudi Arabia, where there's so much of land available, where no vegetation, nothing, everywhere you go, deserts are there, why you required to go and invest so much of money to be in this, to reclaim a part of the sea to have your city, right? Now, if you, anybody of you have gone to Chandigarh, it was done, it is one of the most beautiful cities in India. It has, the architecture is a French architect who has done it, but there is one problem in Chandigarh city. It is basically based on a lot of sectors are there, right? So each sector has got its own market also. One problem in Chandigarh city, you know why? In the architecture. Anybody, any guess?
Sir.
So generally, you will see there are basically in the near the ceiling, there are basically, you will find to have the air flow coming in, you put basically a small hole or a window, right? In case of Chandigarh city, Chandigarh, the built architecture, because he was a French guy, in France, it is very cold and they do not have those kind of architecture. Generally in India, we put kind of a more of windows or this thing so that proper ventilation happens. So there is one problem in Chandigarh they face in the architecture. So there are some architectural issue also there with the Chandigarh city, or initially the buildings that has been constructed. So when you're creating your city, you need to think through a lot of things, that whether it is a viable or not. Of course, Chandigarh is, as I told you, is a very beautiful city. Now, you need to think through that when you're creating, as I told you, you have seen some of the cities in China also. Now there are got a huge number of apartments, the whole city has been created, but people are not living. So one has to think through when they're making an investments, that whether those investments, they will get a return from that or not. Right? So just, I'm giving some of the basically hints to you when you're thinking through. Also, you need to think through how you're going to get the revenue out of that. Okay.
Sure, sir. We'll keep that in mind. Thank you, sir.
Okay, that is why last session also I've taken you through finance, because as you know, some of you need to understand finance is also very, very critical. And since you're from the, most of you are from the IT background, but when you do any project, right, the viability of that project is also need to be taken into consideration.
Yeah.
Next,
Sure,
I
sir.
go to VVS development. So any input or any question, any clarification for tomorrow's session?
No, sir.
So what you are planning to do for tomorrow? High level, you can tell me. So have you considered about the financial impact also?
Yes, sir. We are going to develop a sustainable energy in our projects, sir. Actually, how to make use of sustainable energy sources, and from those sources, how we get the revenue. On that basis, actually, we are doing the project, sir.
Next is Chirag Infotech.
No, sir.
Yeah. So if you don't mind, can you switch on your camera? At least we can see each other. Yeah. So Chirag Infotech. So any questions or any clarification you require?
No, sir.
Okay. I go to the next one. So KTC Hubli.
No doubt, sir.
Okay. So I am seeing that you're going to create some kind of economy smart mobility. So, so if you can just let me know what kind of a thought process you are having on this. The file I have got, it is mentioned smart mobility. I'm not able to hear you. Hello.
We have prepared sir, presentation on traffic management system, sir.
Okay.
So tomorrow we'll be presenting the same. Sir.
Sure, sure. I just wanted to know
Yes.
about whether it is in line with our smart city.
Yes.
Sure. So we will wait for the suspense. And we'll look forward to a good presentation. So please practice among yourself so that we want all of you to be the best. Okay. So this is what I want you to create. So whenever you go for future corporate or anywhere, so you can take forward this kind of a thing you have already done. So I go to the Computech Dharwad. Comtech Dharwad. So any update from your side?
Yes,
any
sir.
questions?
Yes, sir.
So you're all clear, right?
Yes, sir.
No questions.
Yeah, we have, sir. We have one question,
Yeah.
sir.
Yeah, please tell me what kind of questions you're having.
Sir, we would like to know a little more on what should be covered in external factor, geographic and logistics.
For example, the external factors maybe regarding, you are thinking, for example, you are thinking of software developments center in smart city or IoT. Now, what are the external factors? Now, if you take into account, now there is a war going on, newly started in Europe, that is between Azerbaijan and Armenia. Maybe if you are aware or not, I do not know. It is not coming into the media, but Azerbaijan has already started to attack Armenia to get some of the lands, right? To have a corridor, which there is a, on the western side, they have got some land, they want to make a corridor. Now, of course, there is not too much news, but if you search the Google, you will find it. So there are a lot of basically issues are happening. So again, Azerbaijan is an oil producing country. So there can be some disturbances. Next, there can be some disturbances coming between Greece and Turkey. There is already, there's a situation where there can be a war that may start up. So looking at into our example, China and Taiwan. Now the semiconductors, for example, in a smart city, you need a lot of semiconductors, right? Now, the prices of semiconductor will go up, or the availability of semiconductors can be very, very less if there is a war situation. Next is basically, if you take into account for already Israel has some of the done some bombing in Syria, right? So there can be some disturbances that can happen. And based on that, the sea route, for example, you have the lithium batteries for lithium, you need lithium, right? So for lithium you require, and maybe the shipment or the oil that is there, you may have difficulties to get in your country or the smart city, what you're thinking. Next is that if the world economy go next year, that people are thinking for a recession. Now, if it goes like that, then the availability of the large corporates coming to your smart city will be much, much less. The investment globally can be much, much less. So those are the external factors. So you need to think through, if those situation happens, what is the alternative you are having? What is the, basically to counter that, what is your plan? Right? Now, there are, for example, COVID, nobody thought of a COVID, right? Now, when the COVID came, if you see in India, for example, there are a lot of SEZ and ST. They allowed, the government of India allowed the people to work from home. Before, you are not allowed to take your computers to your home, right? You cannot take your computers outside the office premises from the SEZ. Now, there is a change in the policy where the government of India allowed those basically assets to take it out to the homes, and people started working so that the work did not get affected. Next can be the external factor, can be the floods. People in Bangalore knows some of the areas there was a lot of floods and really people suffered, right? People were not able to go to the office also. So what is your plan, right? Or in Chennai, there was a flood. Situation was very horrible, right? In such a situation, what is your backup plan, right? So these are some of the external factors and how you can going to counter it. For example, internal factors is basically how you going to manage the internal, for example, land acquisition. There can be external problem, right? If you do not have the land, if you cannot acquire, you cannot construct your smart city. Some internal problems can be the financial problems. You're not able to manage your finance better, or you did not get the fund at the right time. So the project get delayed, right? So those are the factors you need to take care with, looking into both internal and external. Okay. So I hope I answered your question.
Thank you, sir. Yes, sir.
Okay. Thank you. So let me go to the next center. So Sisti Infotech. So anybody from Sisti Infotech? Any clarity you require? Ashwin, are you there?
Yes, sir.
So Ashwin, any from your students from there, any inputs they require?
No, sir. I've clarified the doubt, sir. I've clarified every points what smart city needs to presentation needs to be covered.
Okay, great. So Ashwin, if you don't mind, can you come on to the basically have your camera on?
Yes, sure.
Yeah.
Yes, sir. We
Yeah.
were in
Thanks,
inspection.
Ashwin.
We were in inspection, sir. Sorry for
No problem.
along
No
with the
problem,
Dr.
Ashwin.
Smith Kumar and DOS, sir.
No problem, Ashwin. So thank you. So if
Thank
you have
you,
got
sir.
any doubts, please let me know so that I can able to clarify your doubts.
Sure, sir. Thank you so much.
So next is Kavita Computers. Avilash and Shojanna.
Yes, sir, Abhilashi. Like, should both teams present on the same day, or is it just one team on one day?
No, you have both the teams need to present
On the same day, is it?
Absolutely.
Okay.
Right. So I will be looking forward for both the presentation. That is why I requested all the names and the participants, because we are going to have a 4-hour session and we'll go one by one, right? So that in one day, we need to basically evaluate the performance. And of course, the peer presentation is the most educated thing, right? People knows how the others are doing. And I want all of you to excel what you have done from the previous and also from the others, so that you can think that you give your best shot, right? So prepare and practice among yourself so that within 8 minutes, you're able to present it. Okay?
Sure, sir. Thank you so much.
So please take care of the number of minutes that has been allocated to you also, so that you can provide a good presentation.
Sure, sir.
Now I go to Sojourner. Any question from your side?
Sir, no, sir, no questions from our.
I go to the next center. That is Sridevi Technologies. Any clarity you require for tomorrow's session? So I'm not seeing the communication from your side. You need to communicate, right? See, the most important thing in a presentation is that communication. So what is your thought? If you want any clarity, please let me know. Ashwin from CK Tech.
Yes, sir.
Yeah. So
Yes,
CK Tech,
sir.
yeah.
Yes, sir. They're ready with presentation, sir. Tomorrow they'll be presenting, sir. Again.
So any clarity required, or you have understood?
Yes, sir. We understood, sir.
See, why I'm asking all of you, because as you can see, the smart city is going to see a huge investment. And you have seen almost $41 trillion, right? In the next 2 to 3 decades. Now, please understand, India's itself, the GDP is only around 3 plus trillion dollar. The US itself is only around $25 trillion. China is only 18 to 19 trillion dollars. So you can understand it is basically, if you take into account the top maybe 5 countries globally, that is the amount of investment in next 20 to 30 years we can see on the smart cities. So it's a huge opportunity will come to all of us, right? And of course, to all of you who are currently are going to go and basically to the industry, right? So that is why I'm asking you, there is a lot of potential to think through, and whenever go to any of the your interviews also, you can mention what you have done for the smart city, right? So these are the things that are going to help you. Okay.
Excuse me, sir.
Yes, tell me.
My name is Pawan. I'm from CK Tech, sir.
Yeah, Pawan, tell me.
Sir, in the adding of finance to the smart city, we have to show with the numbers or how we can demonstrate, sir, that about how we can get sources and type of income.
Yes, I was looking that you should provide how you're going to basically get the revenue, have some kind of thought process, right? For example, you invested 100 crores, right? Now, after investing 100 crores, for example, you take into account, you created maybe smart parking, then you have got a smart metering, then you have got the social security you're going to provide. Next is that the properties that will be coming up. So you're going to have a property tax. You're going to have, for the people using those parking, you're going to charge them. You're going to get some revenue, right? So think through what are for the subways or the basically metro line they're going to use, the transport they're going to use. You're going to charge some fees. So based on that, how you're going to get return on your investments.
Okay, sir. I thought something like estimation, sir.
Then high level, it's a high level. I'm not asking you to give accurate, just a thought process. What is a thought process of earning revenue?
Fine, sir. Fine. Thank you.
Okay. Now coming to the next, Vaishali Computers.
Sir, good morning, sir. Sir, like we prepared for the 2 batches. Sir, are you here?
Yes, tell me.
Audible, sir? Is it audible?
Yes, it's audible. Yes, please tell me.
So, like we are having 2 groups at our center, and they selected for a green tree and recircular, that means a smart circular city. As we are from the North Karnataka, like which is very helpful for us here. And we have taken both for the developer countries and for developing as a new infrastructure here. And we have taken even financial proposals, how we can prepare and from where we can get.
Okay, thank you. So, thank you. So, I hope now all of you have basically have no issues and you have got full clarity, so then I will be looking for a wonderful presentation for tomorrow. Okay.
Thank you, sir.
So let me share my screen. Are you able to see my screen? Let me share my screen. Now, this is basically, if you see the Coal India for last 5 years. Now, this is basically the revenue they having income for last 5 years, the Coal India, just to give you an example. So we have the revenue, we have got basically other income, and this is the total revenue for the year. And of course, there are expenses, multiple such expenses, right? Now, as you can see, this is going to be your profit, net profit, right? After net profit, there are some expenses, and this is going to be the profit, what we call EBIT, earning before interest and tax. And based on that, the company pays interest if they have taken any loan, or they're going to pay tax, and after that, whatever is remain, they pay it dividend to the shareholders if some dividend is available. So this is the rate of dividend basically Coal India has paid for last 5 years. Similarly, this is the balance sheet for Coal India. Just wanted to show you how it looks like so that you know for a large company how it look like. And this is the shareholder funds, the equity capital. This is the equity. This is basically when they earn some profit and retain it, that is called the reserve. And based on the this total is the shareholder fund, that is basically equity and the reserve and surplus. And this became the shareholder funds. The current liabilities in short-term provisions, and overall it becomes the total current liabilities. And these are the assets, and assets that can be tangible assets and intangible assets. Can you give me assets, what we mean by tangible assets? Hello, student, what do you mean by tangible assets? Any idea?
So tangible asset means cash, or intangible means a salary expenses.
No. Tangible assets means basically the fixed assets, which you can see. That is
Yes, sir.
basically
Fixed
land building. And intangible assets is basically kind of a goodwill. Those are we call as intangible assets, which you cannot see. Okay. Any question?
No, sir.
So intangible assets is basically which lacks physical substance or which you cannot see, right?
Sir.
Tangible
Sir.
assets are those you can see.
Sir, excuse me, sir.
Pardon?
Sir, from Vaishali Computers.
Yes.
Sir, tangible assets and the intangible assets. Tangible assets are the touchable assets, like furniture, goods,
yes.
and building. And intangible assets cannot see in bare eyes, like goodwill, copyrights, patent, those are the intangible.
Absolutely, you're correct. So if there is a patent, or basically you have for example, they will have mines, right? They have to have the charge from the private, basically participants. You have to pay royalties, right? So those are the intangible assets. You're absolutely correct. So you can see this is basically kind of assets. They have the current inventories, then investments and trade receivables. So this becomes your current assets, right? So I just wanted to show you what is your balance sheet and profit and loss from one of the renowned company. Now, coming to one of the important thing. Now, in finance, what happens is that when you go to a hospital, right? that doctor asks you to do basically X-ray or check your pulse, blood pressure, right? Or ask to check your blood and this thing. Similarly, in finance also, there are basically some tools through which we do an assessment of the finance for that company. So do you know how we do? It's basically using the ratio accounting. Now, can you tell me what are the general ratios that are used to check how the company is working? Anybody, any idea?
Sir, 2:1, sir. It is 2:1.
What is 2:1? What ratio?
Assets are more than liabilities, sir. That is 2% of assets and 1% of liabilities.
So what is the ratio called?
Sir, debt to equity ratio, sir. That one.
Well, let me show you. So generally what happens is that you have the profitability ratios, right? Profitability ratios are, what are the profitability ratios? Tell me. To know what is a gross profit, right? So for example, a company is having 10 lakhs as sales and it has got 3 lakhs as gross profit. Gross profit, how it comes? Sales minus cost of goods sold.
Yes, sir.
Right? So then basically what we're going to do, 3 lakhs divided by 10 lakhs into 100 gives you 30% is a gross profit. With this profitability analysis, we can understand that the company, if it sells more, then it will have higher gross profit. That means we will going to invest into that company. Isn't it?
Yes, sir.
Why I'm providing you these inputs? Because these are the things you can think through when you create your financial planning for your smart city. You can think through what are the things you need to have. Right?
Sir.
Next is net profit. What is net profit? It is earning before interest and tax. So after cost of goods sold, in whole India, I was showing you there are multiple expenses that also happens, right? For example, you pay the salaries, you paid have the depreciation for your fixed assets, then you have got the travel expenses, you got multiple such expenses, right? So after from your gross profit, what you earn, you paid multiple expenses, and then you come to the figure earning before interest and tax. Divided by sales, provide you the net profit. Now, if I've got another, for example, 1 lakh of my salary, just take salary as a salary, then 3 lakh minus 1 lakh is the 2 lakh. Then I have got 2 lakh by 10 lakh provides me 20% as net profit, isn't it? Now, please ask question. I want all of you to ask question, right? If you do not have any clarity, please let me know. Because no other professors will teach you about the financial impact also. But you have seen, if you do not have the proper planning and financial impact, whatever project you do, it will be not viable, and ultimately the project will get bankruptcy and it will not meet the future goals and see the sunlight also. Next is that if you have taken some loans, for example, if you've taken a loan of 5 lakhs, maybe take an example, 10% is the interest rate, then 50,000 per year is the interest. So when we calculate the net profit after EBT, that means after interest, then it will be from 2 lakhs, it will become 1,50,000. And if it is net profit after tax, that is PAT, if I take profit after tax, maybe 50,000 rupees is paid as a tax, then it becomes only 1 lakh. Then 1 lakh by 10 lakh will give you 10%. What is the net profit after tax? Isn't it? So what you understand? If I have got a higher loan I take, what will happen? For example, from 5 lakhs, I take a loan of 20 lakhs. Then what will happen?
The interest rate, sir. The interest will be deducted in net profit.
So how much is the interest it will be? It will become 2 lakhs, right?
Yes, sir.
So then what happens? Your net profit is 2 lakhs and your tax is also 2 lakhs. What will happen? You is 0%. So will you invest into that company?
No, sir.
Right? So you need to understand, you need to have why finance is very, very important. Now, if you take it maybe 30 lakhs, what will happen? 10% interest on that 30 lakhs becomes 3 lakhs. Then actually, though your company is earning, that is net profit, that is EBIT divided by sales is 20%, but due to your mismanagement of your fund or the capital employed you have taken is a wrong way, what will happen? You will have a net loss of 1 lakh. Isn't it? 2 lakh minus 3 lakh.
Yes, sir.
So that is why it is very, very important that what we say funding of any business, how are you going to fund? So I will come to that ratio in the next, is basically what are the ratios you need to think through also for your capital employed. Next is profitability ratio, is the return on capital employed. That provides you EBIT by capital employed. Now, what is capital employed? Capital employed is total asset minus current liability. Right? Now, whatever your total asset is there minus your current liability is your capital employed. Isn't it? Now, if you are getting, for example, a 10% on return on capital employed, and whereas in the bank you are getting 6%, what will you do? You will go and invest in that business, right? But if your bank is already providing you, for example, 8% interest or 6% bank interest is providing, and your EBIT is only 1%, will you go and invest into that project?
No,
what will you do? You will go and merely, I will put into the bank, no risk, right? I will get a better rate of return, isn't it?
Yes, sir.
Yes or no?
Yes, sir.
Now, what you understand from this, that you need to have proper financing. Profitability analysis ratio provides you that, isn't it?
Yes, sir.
Whether you should go for that business or not. For a smart city, if you think I will spend 1,000 crores and I will take a 900 crores loan, right? Then what will happen? I've shown you some of the countries, right? It's under really real financial problem. Our neighbors, Pakistan, Sri Lanka, Myanmar, you have seen that, isn't it? They're going into Sri Lanka. You have seen what has happened. The people are in the streets, right? Because of the wrong decisions they have taken, the government. Any question, students, in this? If we have no questions, I move on to the next one. Most important, the liquidity ratio. Now, you were saying that current asset, current ratio, what you are talking about, one of you was saying, it's basically the current ratio. Current asset minus current liability. Now, if your current asset is 10 lakhs and your current liability is 2 lakhs, then your current ratio is 5. Similarly, can you tell me what is the industry norm of a current ratio, what said to be good, as standard? Of course, there is no standard. It depends upon the industry you are in, the current ratio. But I just wanted to know from your side, what do you think? Which is the industry norm? You think the hello student, please let me know. Hello student.
Yes, sir.
So what is the current ratio you think is good?
With more assets and less liabilities. This is helpful to the organizations.
So what ratio you think will be good? Current asset minus divided by current liability. What ratio? In this industry, though the norm is 2:1, but it depends again what kind of an industry are you in, right? Now, if you are in a industry where the turnaround of the goods is much, much faster, then of course your current asset of 2:1 is good. But if you are in a seasonal industry or where the turnaround is to be on the not, for example, sugar, if you take, right? Sugar is basically seasonal industry, sugar mills. When you have got the sugar cane, only you can process and have the sugar, isn't it?
Yes, sir.
Now, in those kind of industry, of course, the current ratio may be different, maybe 3:1. During that period, when you are processing, right? Maybe you have got a large stock. And or maybe during the time you are not processing, you are buying a lot of sugar cane, then maybe it can be 1:1. Maybe your current liability is too high because you are buying a lot of material from the farmers and you're just storing in your godown. So it also depends upon the industry you are in. Of course, there are some industry standard KPIs or industry average that you need to consider. And when we do generally kind of ratio analysis, what we do, we compare it with along with the other industries or other companies in the same industry to find out the health of that company. So this is basically this kind of ratio analysis what we do to check the health of that organization. So similarly, you can think for a smart city, what are the things you need to do? Next is quick ratio. So quick ratio is also called the acid test ratio because it provides you whether you're able to manage your liabilities. So here is basically current asset minus closing stock divided by current liability provides you the quick ratio or the acid test ratio. If your closing stock is too high, what will happen? You will go to a negative, though it is preferable 1:1, then you are in a good health. But of course, again, as I told you, it depends upon the industry and also the company you are in. Why this is very, very important? Whether you are able to pay your current liability. Now, if you have got a higher quick ratio, that means, of course, you have got able to pay your current liability, but turnaround of your current assets minus stock, one need to check, because if you keep too much of current asset and then you're not able to utilize those funds, that is also not a good sign. Or if your closing stock is too high, that means you have manufactured a lot of stuff, but you are not able to sell. And as you know, in finance, what happens if you have got closing stock, then if you put it in a go down, you have to pay rent for those also go down, or there is a cost for maintaining that stock. So that means your stock, if you have too much of stock, your prices for your material when you're selling to the customer will be on the higher side, or maybe you loss, or the margin will be much, much less. So one always need to be very, very smart to manage the financial aspect. So as you can see, now you're slowly understanding why I'm taking you through the finance part, because when you create kind of a project or when you're going to create your own companies, you need to be smart enough to manage the financial part of it also. Any question?
No, sir.
What is working capital? Tell me, what is working capital? and why it is important?
Sir, working capital, it is a operating leverage in a business. When the asset more than the current liabilities, it is a working capital, sufficient working capital in very good situation. When the current liability more than the current assets, it is called working capital negative.
One way, what we say is day-to-day operation of the business. It helps to measure that, right? How is your operation? Now, if you have got a current asset minus current liability, if it is negative, that means you are in a big problem, isn't it?
Yes, sir.
Now, working capital, if your current asset minus current liability is too high, that means also it's not a good thing. That means you're not able to manage your current assets or your overall business properly. So you need to have a proper working capital, because I will show you why either working capital is required, because you need to have, or maybe later on I will show you, or I will make you understand. Now, there are basically goods, right? When you are selling to the customers, you are giving some credit, isn't it?
Yes, sir.
Next is that when you are manufacturing, there is a time lag to manufacture that also. So your production life cycle is there to produce that good, isn't it? Then basically you are taking some credit from your vendors. You say that I will pay my vendors after 40 days. I will, to the sellers, to my customers, I will give 30 days of credit. But to produce my goods, I will take maybe another 30 days. Just giving an example. So what happens? 30 plus 30 is 60 days. And you are getting basically credit from your vendor around 40 days. So at least minimum of 20 days of you require fund for this, for the working capital. Otherwise, what will happen? You will not able to produce. You're not able to be in the business. So you have to understand each and every ratio is very, very important. And it also depends upon the industry you are in, the companies you are working, because based on that, you need to create your financial structure. Now, there are, of course, other structures or ratios are coming. Are you able to understand what I'm saying? Any question?
Yes, sir. Yes, sir.
So are you aware of these ratios before?
Yes,
To check
sir.
health of a company?
Yes, sir.
So others. So what's your name?
Sir, Ravi, sir.
Okay, Ravi. So others, I want to have Ravi is answering. What about others? Are you aware of these ratios?
No, sir.
So, but in future, when you work, you need to understand that if you have your own startup business, or if you want to the corporate, right? If you want to do any project, then you need to understand, you have to know the finance, whatever the project cost, right? You need to have a return on that. And if you do not do it properly, what will happen? The viability of the project will go. Next, I go to the activity ratio or the turnover ratio. Now you tell me why this is important. See, this is very important to understand how are you doing your activity, isn't it? For example, stock turnover, the cost of goods sold by average inventory. Average inventory is open inventory at that time, beginning of the year, minus the inventory at the end of the year. So divided by 2 provides me the average inventory, right? So opening plus closing, right? Divided by 2. Cost of goods sold. So opening minus closing divided by 2 is the average stock, right?
Yes, sir.
And cost of goods sold. What is cost of goods sold? COGS. Anybody? Any question?
Opening stock plus purchases minus closing stock, we get cost of goods sold.
The COGS is basically, that is the cost to produce that good, right? So all the expenses that is required to produce that good, that covers all your expenses, means your salaries, your raw material, your interest, right? Everything together. So to produce that good. So that is COGS. And so sales minus COGS provide you gross profit, if you remember in the previous slide, this one. Where I've shown you. I think in the Excel sheet I shown you about the COGS, right? So what is gross profit? How the gross profit is calculated is basically sales minus COGS is your gross profit, right? That's what I told you. Okay. Now, receivable turnover. What is receivable turnover? Net credit sales divided by average receivables. What is net credit sales? Net credit sales is, anybody? What is net credit sales? The sales minus cash sales minus sales return minus any discount you give, provide you the net credit sales. Now, in your model also, if you want to have what is the receivable turnover, then you need to think through what is your net credit sales by average receivables. What is average receivables? At any point of time, the receivable is there in the books. For example, in a seasonal industry, or maybe in the month of May, my receivables is 10,000. But month of September, my receivables is 15,000, right? So if you calculate the receivable turnover, if you month of May you are calculating, then your average receivable will be 10,000 in the month of May, but in September you have to divide by 15,000. And net credit sales, for example, it is 1 lakh. Then based on that, you get a receivable turnover, because you need to know how you are able to manage. Next is DSO. Why DSO is very, very important for every company? That is daily sales outstanding. This is one of the most critical factor for any cash flow. If you do not have a positive cash flow, what happens? Your business is not viable. So DSO is basically daily sales outstanding is average receivables by net sales into 365. And based on this, if your DSO is very, very high, that means you are basically giving a lot of credit to your customers. That means you are not able to manage your cash flow or your fund better. If you have got, for example, 30 days DSO, that means you are able to manage. So you don't require so much of working capital, because more working capital you require more interest, because you have to take loan from the bank, or the investors has to invest on the share capital, right? If they invest on the share capital, they will also require for return, isn't it? If they don't get a return, what will happen? Then it's not worthwhile to invest in that company. So one also need to look into, when you're investing in any company, you need to check what is the DSO. Any question? Students, any question on this?
No, sir.
Next is payable turnover. Now, I've been telling you regarding the payable also. See, for example, when I started in ABB as a business controller, managing business finance, I found in Penia factory in Bangalore that vendors we are paying after almost 4 months. So the vendors are also very, very important and critical to any industry. If you pay them at right time, what will they do? They will provide the goods at reasonable price, and your cost of manufacturing will be much, much less. So what I did, I basically worked with the factory, the payable team, the purchase team, and streamlined whole thing. And we were able to pay them from 4 months to 35 days, right? So what happened? Then, of course, I asked the purchase department how you can negotiate better to get at a better pricing from the vendors. If we can get a better pricing from the vendors, that means we are able to manage our cost much, much better. If we can manage our cost better, then what happens? We will have better profit. Then our sustainability in the market will be much, much better. Similarly, in case of the smart city, if you can able to manage your vendors better, that means you will be getting also better pricing from your vendor. See, the vendor will not sell you at loss. They will add the 4 months of interest and they will jack up the price and give you the product. Right? For example, you have got multiple things that you need to buy from the vendors, right? In your project. Now, you can negotiate them with better when you're able to also pay them faster. Like a customer is always called a king, the vendor is also need to be treated well. Any question? Student, any question? So what is net credit payables? It is purchase minus purchase returns minus cash purchase minus purchase discount, any discount you are giving. So let me know if you got any questions. What is cash conversion cycle?
Sir, can I say, sir?
That is stock velocity plus receivable turnover minus payable turnover.
Sir, from Voice Computers.
Yes, tell me.
Sir, the cash conversion cycle, it is a length of the time taken by the company. Their investment, they converted their investment in inventory and other cash. That is called cash conversion cycle.
Yes. In fact, see, cash conversion cycle is very, very important because nobody has got basically bag full of cash, right? You have your money is also limited. It's a limited resource, isn't it?
Sir.
Isn't it?
Yes, sir.
So what happens when you have the stock velocity? That is basically if you take the stock turnover, right? Now, if you take maybe 30 days, as I was mentioning to you, plus receivable, you got another 30 days. And if you've got a payable turnover of 40 days or 40, right? Then basically is your 20 is the cash conversion cycle. You require 20 days of fund as a working capital. So each and every ratio is very, very important. When you're going to create your financial structure for your smart city, you need to think through why how your fund is coming and how you're planning your investments. Are you with me?
Yes, sir. Yes, sir.
Yes,
So
sir.
I'm trying to basically give you another window of thoughts when you go and prepare your financing planning, because now you are going to the industry or wherever you go, right? If you are smart on the financing part also, nobody can stop you. That means whatever the product you're developing, whatever the project you are doing, you are fully aware how you're going to get a return out of it. And once you know that you're going to get better return, then of course the whole project will be viable. Right? Any question?
No, sir. No, sir.
No, sir.
Next, I go to the gearing ratio. See, I'm showing you so many ratios, right? Gearing ratio. What is gearing ratio says? Is talking about how I'm going to manage, right? Debt ratio, total liability minus total assets. So what it provides? what it does, whether I'm able to pay my debt or not.
Sir.
Right? If my total liability is more than my total assets, that means what? I'm not able to manage my funds properly, isn't it?
Yes, sir.
Right? So each and every ratio, of course, has got meaning. Now, when we do a ratio analysis also, we also check what is the norm for that industry, comparable with the companies who are working in that industry also, and what are the best practices, right? So based on that, we take into account of this. Now, this is very, very interesting ratio. Interest cover, EBIT minus interest expenses. What do you understand by that? So I want some volunteers. Let me know, because in a smart city, this is going to play a very, very important role, because smart city will require a lot of investments, right? A lot of loans. Now, why the interest cover is very, very critical? Tell me what you understand by this. Yes, student, let me know. What is your understanding? See, I'm there to always to help you, but I want you to speak also, to communicate to me.
Sir, interest cover, it is the company able to pay the interest to the debt.
Okay, let me go one by one. First of all, let me go to Sharp Computers. What do you understand? SSC Haveri, what do you understand? Why this is important? Give me your thoughts. Don't worry, if you're wrong also, I'm able to help you. But at least you come out with your thought process. Hello? SH Systems, Raichur. Any thoughts why it is important? Interest cover. Tell me. Interest cover is very, very important. See, if I'm not able to generate income, right, then how can I pay my interest, right? Now, to make a viable project, like in Smart City, for example, you take 100 crores, right? Now, you take maybe soft loan also at maybe 5% interest. That means how much per year? You got an interest expense of 5 crores, isn't it? Hello?
Yes, sir.
Now, if you do not earn, that is before interest and tax, more than 5 crores, how will you pay that? Think through that. You want to buy a property or a car, right? Now, if your salary, for example, you're buying a property, you're taking a house, you're purchasing, and that costs 50 lakhs. Take the EMI for that per month is 30,000. Now, if you earn 60,000 rupees, that is interest cover is 2 times. Bank will happily give you the loan. Now, if you see that you are earning, for example, 20,000 and your EMI is 30,000, if you go to the bank, will the bank give you a loan? No, bank will not give you the loan. Isn't it? Yes or no?
Yes, sir.
Yes, sir.
So, are you understanding? It's not only in the company, it is available, applicable for you in your private life also. Now, why this is important? If you earn 30,000, will the bank give you a loan for the property for EMI of 30,000? Tell me yes or no.
No, sir.
Why no? Tell me.
Because you will have extra expenses also, no, sir, instead of paying the
Very
EMIs.
good, very good. How will you live? You will have some food, you have to buy food, right? You have to pay electricity. You need to convince. Well, bank will not give you, isn't it?
Yes, sir.
So there are some norms in the bank that at least it should be maximum up to 30 to 40% of your salary, the loan you can take. So if you, for example, going for a purchase of property, you will find the bank will ask whether you have taken any other loan, whether you have taken any furniture loan, personal loan, car loan, right? And they will deduct that amount of EMI, and then they will check whether you have the capability to pay your loan or not. Isn't it?
Yes, sir.
Right? So I'm just trying to make it, see, these are all things applicable in your future life also. Don't think only the companies. These are all applicable for you in future. Now, why the bank take into those? Because if you do not have the capability, then what will happen? You cannot pay it. So you buy a dream house, and after that, bank will come and take the property because you have to mortgage it and then sell it off. So similarly, for the car, if you purchase it, you cannot pay it, they will come and take the car back. Right? So that is why it is very, very important in your personal finance also to understand what is your capability to cover those loans you're going to take. See, the problem Sri Lanka currently is facing because they have taken enormous loan from China, right? Now, when they're coming to pay the interest for that loan, they're not able to pay. So what they did, China acting very smart, they say, Harmanpota port, if you're not able to pay, you provide that whole port to us for 99 years. Right? So Sri Lanka had to give their whole property to China because they have mortgaged that. And now they're not able to generate fund because when they've taken a huge loan, of course, the political party taken for their own interest without the interest of the people. What has happened? Project became unviable. They were having not much revenue and they have to give that whole port to China. So you can understand for a smart city, if you take huge amount of loan and you're not able to have proper income revenues generating out of your smart city, then what will happen? All the hard work you have done will go for a loss, right? Somebody will come and enjoy it and take the whole property and you will not able to enjoy that, isn't it? Or the whole city will go for a bankruptcy. Or there will be enormous amount of property tax or other charges in the city and people will start living for some other city. Now you understand why it is important. Students?
Yes, sir.
So, and why it will also help in your personal life, this all the ratios also. Now, as an investor, there are some ratios one need to take care, right? Now, do you know what is earning per share or EPS, what we call?
Yes, sir.
Tell me what you understand. Tell me what you understand by that, earning per share. And why it is important. Because based on the earning per share, as an investor, you will going to see whether I'm going to invest in this company or not. If I see my EPS is very, very low, then I will basically go and put it into my bank account. Why should I invest? Why should I take the risk? I'm taking the risk for investment because I'm thinking I will get a better return by investing into this company or your smart city. Now, PAT is basically profit after tax. And what is proposed dividend? Proposed dividend is there. Of course, I have not told you or taught you, there are different kind of shares. There are equity shares and there are preference shares. So preference shares, yeah, tell me, any question? So preference shareholders are basically, they have got a rate, maybe 7%, 8% it is there. So they are, once the profit is earned, they get preference over the equity or normal shareholders and they first get the 7 or 8% what is there. So that is the dividend they will get. And after that, whatever the residual is there, then the company declares the dividend, if anything is there, as per the Companies Act. I'm not going into in depth, right? Because there are certain things you one need to take into account before proposing a dividend. And based on that, the dividend is declared. And divided by the number of shares, provide you the EPS, right? So EPS is basically very, very critical and important so that one knows whether I'm able to earn better than the market, right? If a company provides higher EPS, people will go and invest into that company because they see the potential of the share prices also going up. I will come to that because in the fourth ratio, when I come, I will tell you why it is important. Next is dividend per share. Dividend per share is basically if I see that I have got 4 rupees as dividend, right? And number of, or basically 40,000 is the dividend. And I have got number of shares is 10,000, right? Then what happens? How much is the dividend per share? Student, I get 40,000 as dividend, and number of share is 10,000. So what is the dividend per share?
Same, sir. 40,000, sir.
40,000 is the dividend and number of share is 10,000. So 40,000 by divided by 10,000 give you 4 rupees dividend.
4 rupees per share.
So dividend per share is 4 rupees, right? Now, paid up capital of that share, it can be 1 rupees or 10 rupees. Generally, it is 10 rupees, but certain shares are 1 rupee also, right? So if it is a 10 rupees, that means investing 10 rupee in one share, you are getting a 4 rupees as dividend, isn't it?
Yes, sir.
Okay. Now, coming to dividend cover, PAT minus preference dividend divided by dividend. So how much is my dividend cover? For example, if I have got 40,000 is my PAT, now 10,000 is my preference dividend. That means, just tell me. So 30,000 divided by what is my total dividend, that provides you dividend cover. This is basically to check whether I will get higher dividend or not in the future and whether the company is doing better or not in the market. So as an investor, I will check on this. That if it is basically in a positive ratio, that means I will have the company is doing well and I can expect the share price of this company to go up. Next is most important is the price earning ratio or the P ratio. Anybody who is investing in the stock market will understand what is P ratio because it is the market price of the share and earning per share. For example, if you have got the market price is 40 rupees for a share and earning per share is 4, then basically the P ratio will be 10. Now, in a market, if you see the IT companies like Infosys, TCS, ACL, you will see a higher P ratio because they are into the basic thing, they're going to earn more profit. So the P ratio is more. But if you go to Indian Oil, for example, you will find the P ratio is on the lower side, right? So that is basically also the investor, what they think. They think the niche areas, if you see Biocon or niche areas, right? They will think they're going to earn much, much profit. Then the P ratio for that company will be on the higher side in the stock market. This is another ratio which also helps with the industry. For example, if the company P ratio is on the less than the industry average, that means I can think the price of the share in the market will go up. Of course, there are a lot of factors. I'm not going into that, but this is generally as an investor, one looks into that. So that is how the PE ratio plays a very, very critical and important role into the investors. Okay. Any question? So,
No, sir.
so another way of doing a P ratio is market price per share divided by PAT minus proposed dividend divided by number of shares. So that is another way of calculating P ratio also. I'm not going into basically, there are basically in finance, a lot of mathematics and statistics are taken into account while calculating the stock prices and this thing. I'm not going into too many complicated because there are a lot of formulas and there are a lot of analysis is done, of course, based on higher basically statistics and mathematical equation and this thing. I'm not going to, because I wanted to keep it absolutely simple and bare minimum. Next is dividend yield. Dividend yield is basically dividend per share divided by the market price per share. So based on the dividend yield, one can think that how much dividend I'm going to get from this share. So if the dividend yield is on the high, that means this share provides me much better return. Maybe I will not put my money in the bank and I can invest into this stock. So stock provides me better return. For example, there are certain Coal India, for example, if you take, last time you have seen, they have provided 117%. Their share is 10 rupees. So that means they have provided 17 rupees dividend, isn't it? Currently, of course, the price of Coal India is around 230. But for example, I think Indian Oil has provided around 12 rupees, I think, dividend, right? And currently the price is 70 rupees, sorry. So they are providing more than 10%. Or in case of, if you take Coal India, for example, how much they're providing, if I divide it by 17 by 230, let me just tell you. Almost 7.4%, right? Now, you can see 7.4% is much better than putting into a savings account, which you can get around 5.5%, 5%, right? So people will start investing on those shares, thinking that they're going to get better return on the investing in this share because they're providing much better dividend, okay? Any question on this? Now, another ratio generally we say is the total shareholder return. That is basically how it is derived, is basically what is your current price of the share minus what is the price you purchased. Now, for example, the current price is 10 rupees. The purchase price is 5 rupees. So 5 rupees plus you get a dividend of, let's take it 4 rupees is the purchase price, and you have taken current price is 8 rupees, and you have got a dividend of 2 rupees. So what happens? 4 plus 2 is the 6, and divided by the purchase price by 4. So it provides you, how much is the return for the year? 150%. So that is for a shareholder or investor who is investing on the stock market, they can take into account of that. Similarly, in your smart city, if you give better return, then you will have more investors coming in. Why this? Now, there is always what we call, how is basically you have going to the capital employed. The cost of capital employed is also very, very important. If you got the equity shares, right? Equity shares, you don't have to pay any interest. If you take a loan, you have to pay interest on that, isn't it? So there has to be a proper ratio.
Yes.
How much of loan you're going to take and how much of fund as a owners you're going to get it, right? Of course, I'm not going to talk now, but there are basically leverages, what we use, financial leverages. If the profit goes on the higher side, taking loan is much, much better. But if the profit comes down, taking loan will be a disaster, right? If the company is not performing well, because you have to pay the interest, that means you will go for a big, big loss. Now, I just wanted to check with you, what is your understanding? Before I share. So any question now from your side? Have you understood why the finance is important for your project and how you can basically provide your inputs in your presentation for tomorrow. And why I'm taking you on this finance part of this, because if you do a wonderful project also, but if you do not do a proper investment or financial planning, the whole project will go for a loss. It will not be viable. So students, let me know your views. Any feedback?
Sir.
So I'm not getting any questions. So
Hello, sir.
yes, tell me.
Sir, I'm Vajida from Raichur Research Systems.
Yes, please tell me.
I wanted to ask you, we should add our finance part in our project, sir.
Yes, of course. That is one of the things, because in this project,
Means
you have to have,
how we should add our
for example, in
like
case of
we should add our ratios, sir, capital ratios.
no, it's not capital
assets,
ratio. I'm just
everything we
showing
should
you
add, sir.
why it is important. For example, that I leave it to you. For example, you are going to spend 100 crores, right? Now,
Yes.
of course, when you're spending, of course, you can put financial ratios also. You'd say the 100 crores I'm going to invest. I taken a loan, 80 crores from bank, maybe at 6%. I've taken from the government funding, or this are 20 crores, right? Government also provide funding for the smart city. So based on that, you have got a funding, or maybe you take it whatever funding you get. So then you don't have to pay any interest. Now, this is my source of income. For example, you create a smart parking, smart buses, right? Where basically on that you are charging some kind of fees, or you are providing the internet, right, within the city free to all the people. So that means the industries who are coming and setting up their offices, right? They don't require to pay any internet, but of course you're going to charge some kind of fees. I'm just giving an example. You think through. I want you to brainstorm and out of the box, you provide your thinking process. Now, for a year, I'm getting 40 crores of income, for example, right? Now, I'm paying the amount of interest is how much? For 6% on 80 crores per year. How much it comes? 4.8 crores, right? Now, if I have an income maybe of 10 crores, just giving an example, that means I'm having a surplus of 5.2 crores. And out of which, then you can have these ratios, what I mentioned, you can show to me. But spend some time and think through. That means your project is viable. Then you will get more soft loans. Maybe, as you know, for a bullet train, Japan has given basically, I think, 0.1% interest rate loan. And that is also for, I think, 30 years or 50 years, right? So there are countries that are providing a soft loan, or maybe the World Bank can provide you a soft loan, because this is an infrastructure project. So you can think through. So you can get better, more loans, and for the next activities you want to do for your smart city. Until unless your project is viable, what will happen? It will be like a ghost city in China, what you have seen, or absolutely a turmoil that is happening in Sri Lanka. Isn't it?
Yes, sir.
So now you're understanding how the finance also plays an important role and critical role in this kind of infrastructure projects.
Yes,
right?
sir.
So, of course, for example, you're providing renewable energy, right? Pollution will be less. Green hydrogen or solar or hydel, of course, that has got a cost. So the people who are going to come and stay in the smart city will have better health. So for that, you can charge some extra cost. Right? So,
yes, sir. Yes, sir.
So that can be your revenue. isn't it?
Yes, sir. That only I was asking, sir.
Yes, absolutely. For example, you have provided cycle in Bangalore. If you see, Hulu is there, right? So you can, through an app, you can download and you can use the cycle. Of course, you have to pay a little bit of price for that, right? Isn't it?
Yes, sir.
You can have a kind of a battery driven cars also available, right? You can, that is basically the rent a car, rent a bike,
Yes.
or rent a scooter. That is available
Like
in the
we
city.
are, we are a service provider where we can provide our service and we can get a charge for that. Yes, sir.
Absolutely, you can get a charge. So, but that also need to be viable, right? So if I invest 10 crores and if I don't get a return, right, then if my investment will go for a loss, right? So I have to think through, and how many days, how many months I will get a return on that, isn't it?
Yes, sir.
You can think of the government subsidy also. I'm just giving you some tips. You can think of the government subsidy. Government also provide a lot of subsidy. Now, if you have anybody has basically done solar panels for in the roof, right, for water heating or electricity, you will see that government of India is also providing some kind of subsidy, isn't it? If you buy a battery car, on the interest for that car loan you taken, right, government also provides some kind of subsidy. So you can think through on that line also, some subsidy or grant you are getting for your investment in your smart city, right?
Yes, sir.
One thing is that technically what are the things you're going to do, that is there. And after that, you need to also provide how your smart city will generate some income so that it doesn't become a bankrupt. Isn't it? Okay. Anybody, any other questions you're having? Hello, students. Let me know if you have got any other questions. So let me show you something more. So let me share my screen. So last time I was showing you about this one, right? So this is basically the balance sheet and the liabilities. One is assets and liabilities. So, and this is the income statement. And regarding the assets, you understood. Liabilities, I hope you have understood. And what is equity? Any question on this?
Yes, sir.
So you understood the revenue and incomes, because that is one of the important thing, how the revenue and the income will be generated. Examples: sales for manufacturing and trading companies, interest and investment income for banks, increase owner's equity, expenses outflows that result from entity's central operation, right? Example: raw material expenses, personal expenses, manufacturing expenses, selling expenses, etc. So that is basically nothing but decrease in owner's equity. So you have to understand, this is basically increases the owner's equity when you have got sales, when you have got income from the investments, but what is reduces if you have got paying for the raw material or any selling expenses or manufacturing expenses, right? That is in layman language, what is increase in owner's equity and what is decrease in the owner's equity. And this is a small exercise. I can tell you, if the company has assets of 2,80,000 and liabilities of 1,20,000 at the beginning of the year, right? And then what happens? During the year, it has investment of 40,000 in the business by the owners, and the company paid a dividend of 48,000. So what amount of net income did the company earn during the year? Can you tell me? Hello, student. So what is the amount of income the company earned during the year? So at the beginning, it has assets of 2,80,000. At the end, it became 4 lakhs, right? The liabilities is 1,20,000 at beginning. And the end, it became 1,40,000. And there is an investment, which the 40,000 by the owners, and the company paid a dividend of 48,000. So what will be the net income during the year? Please tell me. Then I will understand that you've understood what I've told you and explained to you. This is very, very simple. Just wanted to understand how much will be the income for that company during the year. Anybody want to volunteer? See, if you want to do a smart city, right? This is an absolutely basic thing, right? What is happening? Any idea? Okay, let me show you. So what is happening? At the beginning of the year, you have got an asset of 2,80,000. Right? Isn't it? Hello, students.
Yes, sir. Yes, sir.
A liability of 1,20,000. So end of the year, how much you are having?
1,60,000.
So if I have the difference, it's 1,60,000 is the difference, asset minus liabilities, isn't it? In the year, they have made an investment of 40,000 and dividends of 48,000. So net income is 1,08,000. Right? So how the net income of 1,08,000 is coming? One way is that 2,60,000 minus 1,60,000 minus 40,000 plus 48,000 provide you 1,08,000. This is absolutely very, very simple. So if you do at the end of the year, what you are having minus beginning of the year, and from the operation, what you have earned, right? So that provides your net income. So if I go to here in this increase in owner's equity and decrease in owner's equity, just basic, simple equation, and you can find it out. I'm not using any accounting. Just from the, if you want to do your business, how you can do it. So you can only make an investment, right? If you have got money, otherwise you cannot do an investment, isn't it?
Yes,
and
sir.
you paid a dividend of 48,000. You can pay a dividend of 48,000 from your profit, right? Isn't it? Are you with me? You can
Yes,
increase
sir.
your asset. How can you increase the asset? That means you have earned some money. That's why you are able to increase. Now, if I go here at the beginning, that is the stockholders' equity. It was 1,60,000, isn't it?
Yes, sir.
At the end, how much it is? 4 lakh minus liabilities 1,40,000. That is 2,60,000. Right?
Yes, sir.
So what I'm doing is that I have got 2,60,000 is my owner's equity. 4 lakh minus 1,40,000 is 2,60,000. And here at the beginning, it is how much? 1,60,000, isn't it?
1,60,000.
Asset minus liability. That is my stockholders' equity or owner's equity. So 1 lakh rupees is there. What I'm doing, I'm making an investment of 40,000 in the business. So that means owner is bringing 40,000 here. That means what they're doing, injecting 40,000 into the company. And they're paying a dividend of 48,000. So 1 lakh minus 40,000, because that is the shareholders are bringing into the company, plus 48,000 they're paying the dividend. So 1,08,000 is basically the profit for the year. Do you understand?
Yes, sir.
I'm not hearing from others.
Yes, sir.
Yes, sir.
So let me just give you some illustration. Maybe I'll tell you later on. I think I'll just this I will take you later on. Let me take you to so what are the basic accounting assumptions? And understanding of basic accounting assumptions is vital to understand the process of accounting, right? So can you tell me what are the basic accounting assumptions?
Assets, liabilities.
Accounting concept underlying the recording of transactions, right? So we always go with that the entity is a separate legal entity and it is going to continue. So one of the basic assumptions is that it's a separate legal entity, that you and your company are separate. That is why we need to do an accounting. Whenever your company is earning profit or your smart city earning profit, you should not pocket it into your pocket. Then it will affect your whole overall business, right? So that is why I was showing you that concept, how you need to show it separately and measure it. Next is money measurement concept. So you need to know how you're going to measure those money. And that is very, very critical and important. And there are basically accounting principles, and based on that, it has to be done. As I told you, this is basically going concern concept. This is the most critical thing. And of course, Solomon versus Solomon, it was a case. It was established in the court of law that a company is a going concern and one need to do an accounting for the activities. And accounting period concept, generally in India, if you see, April to March is the period generally we follow. Some countries globally, for example, they follow a different period. Like, for example, Siemens is to follow a period from November to October. In case of Indian companies, like if you take the whole India, they follow a period, accounting period is from April to March. Maybe some companies, they follow January to December. So next is financial statements. Our summary of accounting transactions are presented in a manner to enable users to know operating performance of the organization, and also very important on the overall value of the organization. So what you have understood is the balance sheet, profit and loss or income statement, and cash flow statement. The cash flow statement is very, very important. I will explain to you in the next class, because until unless you've got a proper positive cash flow, then how you're going to manage your fund. And balance sheet from the point of view is it summarizes the assets and liabilities of owner equity at a point of time, right? And it basically provides the financial position. Currently, so you will find balance sheet as on date, right? And profit and loss for the period. That is how in the accounting it is mentioned. So, and it has got assets and liabilities in the balance sheet that it shows. Okay. Now, I'm not going into IFRS and Indian GAAP. I will explain to you in the next class. Now, let me just ask you, all of you. There are some drawbacks on the ratio accounting. So I want from you, what are the drawbacks do you think in the ratio accounting? I've told you about the positive things, right? So there are some cons or drawbacks. So can you tell me what are the drawbacks in the ratio accounting, which we measure the health of the company I explained to you? Yes, student. So when you're thinking of a ratio accounting, you need to know what are the drawbacks also, right? So what are the drawbacks? Please volunteer and let me know what you think are the drawbacks.
Sir, clearance of bill, pending transaction.
Okay, anybody, any volunteers? Please communicate. Let me know what are your thought process. Please come up. Please let me know. Any
Bills
other?
receivable, bills payable.
Okay, any other volunteers? Anybody? I'm seeing only from QNX Hubli. So others also, please let me know. Hello, student. Please let me know. What are your thought process? See, one thing you have to understand, the ratio accounting, what we do, it is based on the historical data, isn't it? It is based on the historical data. So the ratio accounting, what we are doing is based on historical data, isn't it?
Yes, sir.
Yes, sir.
Right? So does historical data provides the ratio accounting what will be in future?
Possible.
It will not, right?
Yes, sir.
So that is one of the drawbacks, isn't it?
Yes, sir.
Next
And
is that.
ratio accounting. So ratio
Yes,
accounting can have inherent problem also, sir. Inherent problem of comparability.
Yes, can you explain it further? You are certainly you are coming to that point, but what are the
future ratios are not predictive, sir. Next in future ratios are not predictive.
see you're at least you're coming up. So what happens? A particular business may be faced with issues not common to that industry. For example, a pharmaceutical company, right? Now you have got licenses, right? You need some from US government or from Indian government. They did not got that license at the right time. So the production got stopped, right? So what will happen? So it doesn't provide the correct picture. Or there's going to be external factors. For example, in your smart city, you did not able to get the loan on at the correct time. So you have to borrow at a higher rate of interest from some other source. So what will happen? Your interest will go up. Next is basically if there are new companies that are coming up with latest technology, you think through since you're all into the IT industry, right? If you a company that comes with a cutting edge technology and the cost of production becomes very, very low, can you compare with that with your industry, which is old? It is not possible, isn't it? So these are a problem when you try to compare basically ratio accounting. What we do, we compare it with the other companies in the or competitors in the same industry. Then it is not a comparable. Next is basically the inflation effect. Now, for example, the inflation in some of the countries is very, very high. You have seen some of the countries. Now, any company in those countries are there. You cannot compare to a company globally where the inflation rate is low. Then the ratio accounting will not work. Next is how your strength of your company is there. Whether your company has deep pockets to pay the loans, interest on loans. If you've got a lot of reserves and surplus, of course, if you're not earning profit this year, you can manage with your previous reserves that you have created, a profit you have generated, right? And one of the most important thing is that the strength of your competitors. Now, if you are a small company, right, and your competitor is a large company, you have seen globally that there are a lot of takeovers happening, right? There are large companies coming and buying small companies, isn't it? Now, why this is happening in the same industry? Because if you are very, very small and there are basically large players, though you've got a niche technology, large company will come and buy you. So similarly, in case of smart city also, if you are, for example, into niche areas, or somebody can think that you're going to have a smart parking, for example, or you take into smart travel you have done, or system you have done for your smart city. Now, there is a big player who is there. They have got deep pockets. They will come and buy your smart city. So these are some of the drawbacks that is the ratio accounting may not able to provide you. Okay, so I just wanted to show you some of the financial impact on the smart city, how it can be done. Now I just leave it to you before we close and for tomorrow's presentation, if you have got any question or any doubts. Yes, student, please let me know if you got any doubts or any questions. Okay. So can I now we'll look forward then for your presentation tomorrow from 2 p.m. sharp, right? So we're going to have 2 to 6. So please come online few minutes before. Please practice it properly and check the systems before. I will please request the faculties who are there, please ensure that the systems are working properly, because last time also we faced some issues. So that please come on the video so that you can present it and internally you practice. And I wish all of you all the best. Thank you, everybody.
Thank you, sir.
Thank you so much, sir.
Yes, sir.
Thank you, sir.
Thank you, sir.
ಇನ್ನೊಂದು 10 ನಿಮಿಷ ಹೋಗೋಣ. ಇದೊಂದು ಸ್ವಲ್ಪ ಓಪನ್ ಮಾಡ್ಬಿಟ್ಟು ಹೋದ್ರೆ ಕರೆಕ್ಟ್ ಆಗಿರುತ್ತೆ. ಓಕೆ.